आप बोलेंगे तो मैडम आप मराठी में तो ज्वाइन करा ना। उधर किसको एड्रेस करे ले सर से? क्या था?
Good afternoon, madam.
Yeah, good afternoon, everyone.
आवाज देखिए सर सर आवाज हेलो हेलो सुमित सर
Yeah,
शुड वी स्टार्ट रितेश सर
I think we can start. It's 3 o'clock. We can
इट्स
start.
3 सो ओके वी मे प्रोसीड अथर्व यू कैन स्टार्ट
Uh, yes, a very good afternoon, esteemed guests, faculty, students, and the participants. A very warm welcome to this insightful webinar on GST, resolution mechanism, adjudication, appeals, resolution authority, and compounding of offenses, which is jointly organized by the Center for Mediation and Research. It is in collaboration with the Directorate General of Taxpayer Services, the Mumbai Zonal Unit, and I'm delighted to be your anchor here with my co-anchor, Mr. Vedant Maikar. And I'm looking forward to guiding you through this knowledge pack session of today, which will be from 3 p.m. to 5 p.m. on this day of June 25th, 2025. Now, before we dive into the proceedings, please allow me to set stage by introducing our esteemed organization, Maharashtra National Law University, Mumbai, and the Center for Mediation, which are at the forefront of legal education and alternate dispute resolution in India. My university, Maharashtra National University, has been established under the MNLU Act of 2014, which is one of India's premier most national law university. Since its inception on 1st of August 2015, MNLU Mumbai has been committed to imparting advanced legal education and fostering society-oriented research to drive social transformation and development. Over the past decade, the university has made remarkable strides in legal research and education, cultivating a generation of lawyer, legal professionals, and reformers equipped to address the contemporary challenges. With a vision to excel in the field of criminal Mumbai continues to create opportunities for learning, collaboration, and innovation, making it a beacon of legal excellence in India. While the Center for Mediation and Research, which is at the heart of this session today, it's a pioneering initiative of MNLU Mumbai. It was inaugurated in January of 2019 and holds a distinction of being the first of a kind center in India, which is primarily dedicated towards extensively studying and practicing mediation. See, it envisions itself to be a hub of research, resource building, and knowledge dissemination in the field of mediation, conciliation, and collaborative dispute resolution. And since its establishment, CMR has taken a range of impactful activities. It includes workshops, certificate courses, training programs, from conducting a pilot workshop on patient doctor conflict resolution in February of 2019 to launching its first of a kind master's degree in MA mediation and conflict resolution in September of 2020. CMR has consistently pushed its boundaries of alternate dispute resolution. The center has forged significant partnerships also by signing MOUs with the main mediation center, the High Court of Mumbai, and also Maharera to train judicial officers, lawyers, and conciliation officers. Through its Meet the Mediators series and capacity building workshop, CMR has brought global and national expertise to its stakeholders, fostering dialogue and learning. Today's CMR, in collaboration with Internship and Placement Cells and the DGTS, Directorate General of Taxpayer Services, the Mumbai Zonal Unit, brings you this webinar to explore the intricacies of GST, dispute resolution, a topic of immense relevance in today's legal and economic landscape. I'll introduce the webinar shortly. The webinar on GST Dispute Resolution Mechanism, Adjudication Appeals Resolution Authority, and Compounding of Offences is designed as a comprehensive understanding of the processes and frameworks of governing GST disputes in India. As the goods and service tax regimes continues to evolve, effective dispute resolution mechanisms are critical for taxpayers, legal professionals, and administrators all alike. This session will delve into the nuances of adjudication, appeals, resolutions, authorities, and the compounding of offenses, offering a practical and expert perspectives. Now, I'd like to pass it on to my co-host, Mr. Vedant, to introduce the panel.
Thank you very much, Atharva, for your brief introduction. I would like to invite Assistant Registrar Academics Amit Kumar sir for his opening address. Amit Kumar sir is a Max Planck Fellow and has collaborated with various international institutions, having an LLM from Indian Law Institute and a LLB from Delhi University. Apart from that, having a French literature master's, so having an interdisciplinary approach in his studies and also being an administrator. Over to you, Amit sir.
All right. Thank you, Vedant, for that very magnanimous introduction. And good afternoon, everyone. It's an honor and a privilege again to deliver the inaugural address at today's webinar on GST Dispute Resolution Mechanism, jointly organized by the Center for Mediation and Research and Internship and Placement Cell of the Maharashtra National University, Mumbai, in collaboration, of course, with the Directorate General of Taxpayer Services, Mumbai Zonal Unit. So at the outset, I would like to acknowledge with deep gratitude the constant guidance, inspiration, and leadership provided by our Honorable Vice Chancellor, Professor Dilip Ukesa, whose visionary stewardship has continuously driven MNLE Mumbai towards academic excellence and meaningful legal discourse. I would also extend my heartfelt appreciation to our esteemed Registrar, Associate Professor Dr. Pratap Singh Salunke, for his unwavering support in facilitating events that bridge legal education with real-world practice. On behalf of the university and on my own personal behalf, I warmly welcome our distinguished guests, eminent speakers, faculty members, students, and all participants joining us today. Your presence, in fact, is a testament to the shared commitment we all hold towards deepening our understanding of the evolving legal and regulatory frameworks that shape our society. The goods and services tax arguably has been one of the most transformative fiscal reforms in India's economic history. And as is the case with any comprehensive reform, it brings also along with it a complex landscape of legal and procedural challenges. Today's webinar, in fact, offers a timely and much needed platform to engage with these complexities, especially concerning dispute resolution mechanisms, adjudication, and compounding processes under GST. I warmly welcome Shri Sumit Kumar, Principal ADG, DTTS MZD Mumbai, for his esteemed presence today. And I must say, I can personally vouch for your diligence and commitment towards academics. We are also privileged to have with us CA Ritesh Rathi, a distinguished expert in this field, whose insights and experiences will greatly benefit everyone present here. I wish also all the participants an enlightening and enriching session. May today's discussions lead not just to greater clarity, but also spark deeper curiosity and a continued engagement with the pressing legal issues of our times. Thank you once again, everyone, for being with us. Thank you.
Thank you very much, sir, for setting the tone for the session. Now, I would like to invite Mr. Sumit Kumar, sir. Mr. Sumit Kumar, sir, a distinguished 1994 batch Indian Revenue Service officer with an illustrious career spanning over 3 decades, with extensive expertise in CGST, customs, and custom preventive. He has held key roles, including chairman of the Central Board of Indirect Taxes and Customs, member of GST Drafting Committee, and various leadership positions in Mumbai and Kerala. A scholar with degrees in international relations, finance, laws, and more. He has also served as a journalist with the Economic Times, today as the head of the Directorate General of Taxpayer Services, Mumbai Zonal Unit, the largest zone under CBIC, covering Maharashtra and Goa. Shri Sumit Kumar continues to shape India's tax administration with its visionary leadership. Please join me in welcoming Sir. Over to you, sir.
Thank you so much, and very good afternoon to all the participants. I'm honored to extend my very warm greetings to Professor Dilip UK, the esteemed Vice Chancellor of Maharashtra National Law University, all the academics, Assistant Professor Amit Kumar, and the entire faculty which has organized this event. Our expert speaker today, Sri Ritesh Rathi, who is a chartered accountant, all the students of MNLU, the participants, representatives from many trade associations. We are conducting this event in collaboration with the Maharashtra National Law University Center. We look forward to a productive and insightful discussion on a very, very important subject. I intensely appreciate the initiative and cooperation extended by Maharashtra National Law University. And with the support of my staff, this event has now fructified today. The collaboration has been instrumental in ensuring that a topic of great importance is presented before the participants and will greatly enhance their knowledge and help ultimately in tax compliance. Directorate General of Taxpayer Services is under Ministry of Finance, Government of India. It's a wing of Central Board of Indirect Taxes and Customs. We are mandated to deal with taxpayer grievances, any issues relating to customs, GST, or allied matters. The taxpayer associations, representatives should contact us, and we'll take care of their issues and grievances. We also look forward to bringing taxpayer education on demand from various trade bodies and taxpayers. We are supposed to lay down the service standards and monitor the effectiveness in all the field formations in our jurisdiction. We review the functioning of our Government of India Citizen Charter and Sarvottam program. We are supposed to conduct qualitative and quantitative research surveys, satisfaction surveys, and impact analysis amongst taxpayers, potential taxpayers, and the trade. We are supposed to look at enhancing the customer understanding and maximizing voluntary compliance, which is the backbone of Indian tax system, and monitor the various avenues which are provided, open house meetings, etc., for the taxpayers and taxpayer groups to redress their grievances. We are implementing the Ombudsman directions and awards and overseeing the taxpayer service centers, analyzing the activity reports in the entire state and other states where we have the jurisdiction. In line with our mandate, Directorate General of Taxpayer Services, in collaboration with Maharashtra National Law University, is organizing this event on GST dispute resolution mechanism, adjudication, appeals, revision authority, and compounding of offenses to create awareness and facilitate knowledge sharing amongst stakeholders and the law students. The key objective of this webinar is to highlight the importance of understanding and navigating GST dispute resolution mechanism for the taxpayers, for the trade, and also for the students. The event aims to provide insights into adjudication, appeals, revision process, as well as the alternate dispute resolution routes, that is compounding offenses, has also advanced ruling, which is provided in the law. This knowledge will help enable the participants to better manage GST compliance and dispute resolution. Our webinar today is organized as part of GST Pakhwada, that is from June 16 to June 30th. July 1st is the GST day. And this aims to raise awareness about GST, as also providing taxpayer knowledge about taxpayer grievance redressal and assistance, which DGTS provides, especially facilitating individuals, partnerships, and MSMEs. To give a background, on 1st of July, GST would have completed 8 years. GST replaced multiple tax levies which was part of the earlier system with a unified tax structure. GST eliminated cascading effect of taxes. GST has laid foundation for a common national market, with the Honorable Prime Minister has called One Nation, One Tax. The benefits of the tax system is now seen after 8 years in operation. Taxpayer base has increased from roughly 67 lakhs in direct taxes. Both center and states had 67 lakhs in 2017. Now it is 1.47 crores as on August 2024. Tax collection, monthly tax collection is now 2 lakh crores per month and is expected to rise even further. This is the GST tax collection. There is custom tax collection also, which I have not added to this figure. The tax system has gone totally digital, streamlining registration, return filing, tax payments, refunds, e-way bill, e-invoicing, invoice matching, and in future, we are going to automate litigation management, electronic issuance of show cause notices, electronic issuance of all queries, to enable faceless assessment so that there's no physical contact of the taxpayer with the tax authorities. The policy of Government of India, which is part of GST Council, is uniformity in tax administration. Of course, several challenges are there. We face challenges of classification. There are multiple rates. There are key sectors outside GST: electricity, land, petroleum, natural gas, ATF, alcohol, etc. are still outside GST. There's still an absence of functioning tribunal. And government has intended to move towards a stable 3 rate slab. The reforms are aimed to make it the most taxpayer-friendly tax system in the country. So understanding GST dispute resolution mechanism is crucial to all taxpayers, whether it is a proprietor, it's an entrepreneur, it's a partnership, or any other business, to navigate indirect tax compliance effectively. This event of GST dispute resolution mechanism will provide valuable insights into the process and procedures under GST laws, covering key sections as adjudication, which is section 73 and 74 of CGST Act. Now, adjudication is the start of the dispute resolution mechanism. There's a very famous saying: power corrupts and absolute power corrupts absolutely. Therefore, the Government of India, when it made the law, and Supreme Court of India has held that while Civil Procedure Code does not apply to departmental proceedings, doctrine on natural justice applies. This is to enable that the taxpayers face a transparent procedure, and their tax dues are confirmed in a manner whereby they get justice and can then appeal. Appeal provisions are very important. Right now, we only have appeals to the commissioner, since there is no GST tribunal still functioning. The appeal mechanism allows the taxpayers and department to challenge these orders, adjudication orders, and appeals can be filed with these authorities. Now, any appeal at the present moment has to go to the High Court and through writ proceedings. We have also a parallel provision of revision authority, which is similar to what BNSS also has, whereby department can also correct the mistakes made by the adjudicating authorities who work under the commissioner. The ADR route is through compounding of offences, section 138 of the GST Act. This allows the taxpayers to settle disputes and offences by paying compounding amounts and relieving the criminal courts of the load. It saves time. The entire purpose of having this section is that the system should not be overloaded, and both the revenue and the taxpayer should get relief at the earliest. This provision of compounding provides an opportunity for taxpayers to rectify non-compliance without facing prosecution, providing and promoting voluntary compliance. This event offers practical guidance on navigating these dispute resolution mechanisms, enabling all taxpayers, especially MSME businesses, to ensure compliance and minimize potential disputes. By staying informed about these provisions, the students, lawyers, chartered accountants, and other professionals can focus on their core work while also ensuring adherence to tax laws. Our speaker today is an expert. Shri Rathi is a FCA, LLB, DCL. He is a seasoned chartered accountant and expert in direct and indirect taxes, compliance and audit. He has a background in planning, representation and consultancy. Shri Rathi brings extensive knowledge and experience to the event. He'll be sharing his insights on GST dispute resolution mechanism. He'll be speaking on adjudication, appeal, revision authority, and compounding on offences at today's webinar. With these words, I welcome you all to the insightful seminar, and I especially thank Dr. Abhijit More, who has really provided the backbone to ensure that this event takes place today. Thank you so much. Jai Hind, and over to you, Dr. More. Thank you, sir.
Thank you very much, sir, for your insightful words. Now, I would like to introduce our the chief guest for today's session. The core of our webinar is the technical session led by our esteemed resource person, CA Ritesh Rathi, from Ritesh R. Rathi and Associates, a fellow chartered accountant with qualification in CISA, DISA, DCL. CA Ritesh Rathi brings a plethora of expertise in GST and dispute resolution. His session will provide an in-depth exploration of the GST dispute resolution mechanism, covering adjudication process, appeal procedure, resolution authorities, and compounding of offences. This promises to be an enriching practical discussion for all the participants. I would like to welcome you, sir, and over to you.
Yeah, thank you. Thank you, Vedant sir. Thank you, MNLU. And thanks a lot, Sumit sir. Thank you for this opportunity. Glad to be here with our fraternity. And should I start with the presentation?
Yes, sir. You can
All
proceed.
right.
Yes.
Thank you.
Okay, I'll just share the presentation. Okay. All right. The presentation is visible.
No, sir. Now it is visible.
All right. All right. Thank you. So today's presentation is based on our dispute resolution mechanism. Rightly said by Sumit sir, it's nearly 8 years now. We are at the end of 8 years, and 17 acts submerged in this act, plus what Sumit sir has shared, from 67 lakhs to 1.47 crore taxpayers. So obviously, with this increase, we also expect that there will be disputes related to interpretation, related to facts, circumstances, legal provisions, etc. That's where today GST dispute resolution mechanism comes into picture, which seems to be very important. Let me take you through this now. All right. So today, let's begin our discussion. Before we dive into the specific provisions related to dispute resolution mechanism, let's first understand why disputes resolution is so crucial. As said, already said, shared by Sumit sir, first it ensures proper tax compliance. So it ensures proper tax compliance and sustained revenue collection for the government. 1 second. Yeah. Timely resolution also helps in early realization of government dues, but also allows taxpayers a fair opportunity to explain or rectify their position. Secondly, it provides a formal avenue for the taxpayers to raise any grievances, any grievances or challenge the demands raised by the tax authorities. So this is especially important because GST, as we all know, it is a self-assessed tax system, and differences in interpretation will definitely arise. Next, a strong dispute resolution mechanism upholds fair and transparency in tax administration. So these are the reasons where we understand why dispute resolution mechanism becomes important. Now let's briefly glance at the various mechanisms available under GST. So first is adjudication. So that's where things all start. This is the first step where tax authorities assess and decide upon the tax liability. Next step is appeals. Suppose the taxpayer or the departmental officers are not satisfied with the adjudication order. There are multiple levels of appellate forms available. Revision. So revision is only to be entertained by senior departmental officers to correct any inadvertent mistakes in the order. Lastly, compounding. So for certain offenses, the law provides an option to settle the matter by paying a compounding fee, thereby avoiding long prosecution, and criminal courts are also saved by this. All right, so let's go through the each of these four mechanisms. So this starts with adjudication. Adjudication, it's section 73 is there. For this, section 73 is only for cases where there is no ill intent, no malintention. There is no intent to fraud or willful, misstatement and all. So the trigger for section 73 is tax not paid or short paid, or erroneous refund, or input credit wrongly availed, utilized for reasons other than fraud. Now this section 73 and even the next section 74, we have to be careful because these are valid only up to financial year 23-24. That's why I have highlighted up to 23-24. For 24-25, a new section has been introduced and it will be continued later on. Next, so once the trigger has been invoked, once it is invoked, the section 73 has to be applied and adjudication has to be made under section 73. An officer has to issue a show cause notice. The time limit to issue the show cause notice is 3 months prior to issuance of order. So basically, we have to check what is the time limit for issuance of order also. So time limit for issuance of order is 3 years from relevant due date of financial year annual return. You get 3 years. The officer gets 3 years to pass the order after from the date of filing of annual return. That means, technically speaking, show cause notice has to be issued in a time frame of 2 years and 9 months, right? Okay, so show cause notice is issued. Now what? The taxpayer still has got two options. So one, before issue of show cause notice, in case he himself identifies some error or something, so he himself can pay tax, he can pay it along with interest and inform the officer in writing. No show cause notice or penalty shall be levied on such paid amount. In case some amount is unpaid, still the officer can issue notice for the unpaid amount. Next is, suppose show cause notice is issued. Now, even now, payment within 30 days of show cause notice. If some taxpayer makes the payment within 30 days of show cause notice, tax plus interest, there is no penalty at all. So government has given us two options. Either you pay on your own, or when show cause notice is delivered, you got 30 days, you can pay it without any extra penalty. And all the proceedings are deemed to be concluded over there. What if both these options are not chosen by the taxpayer? Then of course penalty has to be levied, which is 10% of tax or 10,000, whichever is higher. Right, so that's where the adjudication starts. Remember, 73 section is especially for cases where there is no fraud or willful misstatement or suppression of facts are involved. Right, now there are certain things which a person has to take care in section 73. It is our normal perception that a notice is for 1 year. Very true, notice is for a particular period. But in section 73, they have covered even other periods other than for which the show cause notice was issued. So the officer, the proper officer, can serve a statement for other periods also. And if the grounds of this statement of other periods and the show cause notice of the relevant period both are same, then this statement will be deemed as a show cause notice for that other period also. This has to be taken care. Plus, very important, mandatory penalty. Self-assessed tax or tax collected but not paid. That means the taxpayer is himself declaring a liability. He has collected but not yet paid to the government. He has to pay it within 30 days of due date of payment. If it is not done so, then there is a provision of mandatory penalty. Whether or not show cause is issued or not, the penalty will be levied. Sorry, show cause has to be issued and penalty has to be levied. There is no escapement from the penalty. This has to be taken care when we are adjudicating under section 73. All right. So next is section 74. Now this section is similar to the adjudication under section 73, but over here the crux is the intent. The intent of the taxpayer was of fraud or willful misstatement or of suppression of facts. So that is where section 73 and 74 has a difference. Same trigger, tax not paid, short paid, or erroneous refund, or ITC wrongly claimed, but with the intent of fraud. Yeah, of course, since it is a serious offense, you will get the timelines, the time frame for show cause notice and issue of order and penalties are different. So the show cause notice has to be issued at least 6 months prior to issuance of order. This was 3 months in section 73. Over here, it is 6 months from the issuance of order. And issuance of order also has got time limit of 5 years instead of 3 years as compared to section 73. So that means 4.5 years for the show cause notice, 5 years for issuance of order. Coming to penalty in section 74, of course, if the intent is bad, there has to be penalty. So before show cause notice, it is only 15%. So you pay tax, you pay interest, plus you pay 15% penalty. Next, within 30 days of show cause notice, because now the officer has issued a show cause notice, it was not a voluntary payment. That is why penalty has to be increased in the case of frauds and malintention. So you have to pay tax plus interest and of course 25% penalty. Suppose even after 30 days, you do not pay the amount and the order is issued, you still get chance of a relieved penalty, that is 30 days, within 30 days of the order. Within 30 days of the order, you get a chance to pay tax, interest, and only half of the penalty, that's 50%. Once you cross 30 days of the order, that means whatever penalty is levied, you have to pay it 100%. There is no option to left to your penalty. So it is better, the earlier you pay, the better is the taxpayer's position. Now again, this section 74 is also applicable only up to financial year 23-24. There was an amendment last year. So these two sections, adjudication process, is only up to financial year 23-24. Next, the section 74A. 74A is for both the cases, fraud and without fraud. So whatever may be the intent, they have in this 74A, now both the sections have been clubbed. So if we see the trigger part is the same, whether about ITC or tax payment, short payment, and erroneous refund. But over here, show cause notice time limit has changed. Now the show cause notice time limit is 42 months from the date of annual return filing of that particular year. That means you get around 3.5 years. 3.5 years to show cause to issue a show cause notice. And then if you see the timeline for order, it is 12 months from show cause notice. So the officer gets 1 year from the date of issue of show cause notice to issue a order. Penalties are the same in both the cases. Penalties are mentioned same way. So it is in case of reasons other than fraud, it is no penalty up to over here it is 60 days of the like in 73 and 74 we had 30 days time frame. Now the government has given us 30 extra days to take a call and pay off the liabilities as early as possible. So up to 60 days of show cause notice in case of adjudication where reasons other than fraud is involved, it is without any penalty. After 60 days, of course, penalty will be levied. That is 10% of tax or 10,000, whichever is higher. And again, 60 days are also available even in the cases where fraud or malintention is involved. So in case of fraud or malintention, again 60 days instead of 30 days, penalty percentage remains the same. Before show cause it is 15, within 60 days of show cause it is 25, and within 60 days of order it is 50%. So that's it, and penalty remains the same, 100% of tax once you cross 60 days of the order. The only one small addition in 74A is no show cause notice to be issued for an amount less than 1,000 rupees. So this is the comparison. If you see about the differences in 73, 74 and 74A, applicability of the year, monetary limit of 1,000, time frame. So 3 years in 73, 5 years in 74, and 12 months from issue of show cause notice. This is the time limit to issue order. And time frame to issue notice is 3 months prior to order, 6 months prior to order, 42 months from the due date of filing annual return. And of course, voluntary payment period from 30 days to 60 days. So over here, we complete the 73, 74, where the tax is determined. Now we come to next section 75, where general provisions are involved. This section governs how general provisions shall apply to adjudication. This section covers provisions like opportunity of being heard. Of course, that is a legal mandate. Exclusion of period of stay granted. Of course, it's all written in this. If fraudulent intent, this is important. If fraudulent intent while adjudicating under section 74 does not sustain, then proceedings shall go according to section 73. No need of a new process or new notice again. Order within 2 years as directed by the higher authorities. In general, earlier there were provisions where adjournments were unlimited, but now in GST it is very clear: no adjournment more than 3 times. Only 3 adjournments are allowed. Demand or grounds in order cannot be other than demand or grounds in show cause notice. Note here, I am saying demand and grounds both. It is not only demand. Even the grounds has to be in show cause notice. It cannot differ in the order. And interest payable under section 50 is mandatory, whether officer wants it or not, or there is any hardship to the taxpayer. It is a mandatory provision. Proceedings deemed to be concluded if order is not passed in 3 or 5 years as per section 73 or 74. I have purposely chosen the black and white because now all legal provisions are involved here. Of course, tax wrongly collected and paid to government. There can be wrong interpretation or misinterpretation while paying the local tax or IGST. So in case a person assumes something to be intrastate and he pays CGST, SGST, which is later on held as an interstate transaction, he shall be eligible for the refund. That means he has to pay IGST and he will get the refund of CGST and SGST. Vice versa, if a registered person pays IGST and which is later held on as intrastate, he shall not be required to pay CGST, SGST, pay interest on CGST, SGST. Of course, the refund has to be applied in a span of 2 years from the date of payment of correct tax. Okay. Recovery initiation, section 78. So you get where any amount payable by a person has not been paid within 3 months from the date of service of order confirming the demand, whether 73, 74, 74A. Recovery proceedings shall be initiated by the officer. Officer can reduce this period if considers it is necessary in the interest of revenue. So 3 months is the higher cap, but officer has always the option to reduce this in case it is for the betterment of department or collection. 79, recovery of tax. So how? So in case the taxpayer is not paying the tax, then what is the process of recovery? When any amount payable by a person to the government under any provision is not paid, the proper officer may recover the amount by one or more as per this section. Deduction from any money payable. When we say any money payable, it can be anything. For example, refund or detention and sale of goods under the control of proper officer. Means, for example, goods in transit, it can be under the control of the officer. So suppose the recovery order comes at that time, so officer can detain and sell those goods. Then recovery from third parties, which we call as a garnish order, garnish proceedings, right? So, for example, bank is one of the third party, your debtors is another party. Such third party is legally bound to comply with such garnish order. Of course, they receive valid discharge from their debt to the defaulter to the extent of the amount paid. Restrain and sell movable or immovable property. This is the last option. In case there is no immediate cash flow system, then they will go for, the department may go for even the immovable property also. So they receive, in short, section 79 provides wide-ranging powers to the GST department for recovery of any unpaid taxes. It allows direct recovery from defaulters, attachment of property, or third-party recovery in any way. Next comes the installment. Suppose the dealer or taxpayer wants to pay, but he is having a financial hardship. So this provision helps him out where it is a balance for him. So section 80 allows the commissioner, only the commissioner, to permit taxpayers under certain conditions to pay outstanding dues in installments to ease the burden of lump sum payments. This provision is intended to balance government revenue interest with taxpayers' financial hardship. On an application by such taxpayer, commissioner may allow installments if the taxpayer shows sufficient cause. He may allow the demand to be paid in monthly installments, but not exceeding 24 months. He gets only 2-year installments if the commissioner permits. Remember, taxpayer is liable to pay interest, of course. It's an installment. It is not that you can interest-free EMI. It is not that way. So he is liable to pay interest under section 50 on the outstanding amount. Now, there are 2 points to be noted here, which are very important. If taxpayer defaults in payment of any installment, so even one default, full remaining amount becomes immediately recoverable, entire balance becomes due immediately. So in case any dealer or taxpayer is availing installments under this section, he has to be very clear that he does not decline any of the installment. And what cannot be covered under installment is amounts due under self-assessed liability in returns, for example, GSTR 3B, GSTR 1, etc. When you yourself are declaring these amounts, it cannot be paid in installments. You have to pay it upfront. Installment schemes are only available for the adjudications demand other than the self-assessed demands or liability. Advance ruling. Yeah. So this is a good initiative in the GST. So you have the mechanism of advance ruling where you can have a decision. Suppose before starting a business, or even if you are already doing a business, but there is some confusion or ambiguity regarding the transaction and tax liability and applicability of notification and all. So you can go for an advance ruling from the department where you mention your facts and figures and you let them know what is the difficulty you are facing. So advance ruling is for registered person also, for unregistered also, because someone is going to start a business, he can also go for it. So these are the questions on which advance ruling is sought normally. So classification of the goods, notification applicability, you can go for determination of time and value of and supply, admissibility of ITC, determination of liability to pay tax on some goods or service, whether applicant is required also to be registered or not. He may not be required, he may be required. So that he can go for advance ruling. whether any particular thing done by the applicant, okay, whether if I'm transacting or if I'm doing something, is it covered as a sales in GST or not, as a supply of goods or service or not. That also you can go and ask in the advance ruling. So the process of advance ruling is you apply in GST ARA 01 form, then the authority will call for additional information if required and understand your question and circumstances. Then he may or may not. So he may admit your application, he may not, or that means he may reject your application depending on case-to-case basis. And once admitted, then he may call for further examination. Of course, there will be hearings also involved in this. And ultimately, the ruling will be pronounced within 90 days from the receipt of application. Remember, it is an advance ruling. It is applicable or it is binding only to that particular applicant. Advance ruling cannot be universally binding to all the dealers, because facts, circumstances will be different with every individual or GST registered dealer or unregistered dealer, whatever he may be. So whatever advance ruling is pronounced, it is applicable only and only to that particular applicant. Of course, copy of ruling will be circulated to applicant and the concerned officer. Ruling, yeah, it will be void ab initio in case the facts were documents and the facts were misrepresented, or suppression of facts, intent of fraud. If these things are involved, the advance ruling will be void ab initio. It will be having no binding effect on the department or on that office. 160, yeah. So some grounds where assessment proceedings cannot be held as invalid. So for technical, small minor defect or omission, you cannot held the entire proceeding to be invalid. I'll give you examples. So examples are unsigned GST orders, for example, as it is mentioned. So of course, that is a very small procedural error. So it will not affect the validity of the assessment proceeding. Rectification of errors. Right. So that's one rectification of errors. So any order or notice or certificate can be rectified if the mistake is apparent on the face of record, on its own motion, or you bring it to notice of the officer. But there is a time limit. You get a 3-month time limit for rectification of any such error. Of course, there is a proviso also to this, where no rectification shall be done after a period of 6 months. Now, this 6 months, if you see the next last para, 6 months shall not apply in such cases where rectification is purely in the nature of correction of a clerical arithmetical error arising out of some omissions. So clerical or arithmetical error you can rectify anytime, even later on, after 6 months also. But it is any rectification after 6 months is applicable only if it is clerical or arithmetical error. Otherwise, the time frame is only 6 months. All right, so orders have been passed. Orders, if to be rectified, it has been rectified. Now comes the next level. So appeals. Appeals to appellate authority, section 107. So what is the purpose? Rather, who can appeal? Any person aggrieved by any decision or order passed by the adjudicating officer can file an appeal. He can be the taxpayer or it can be the departmental officer also. If he is the taxpayer, he has to file appeal within 3 months of the order. And if he is the officer, he gets a time frame of 6 months. The appellate authority may allow a further extension of 1 month if sufficient cause prevails. Before filing appeal, appellant has to deposit 100% of admitted tax liability. When you are admitting some part of the liability as, yes, this is correct and I have to pay. Then before filing appeal, you have to pay 100% of the admitted tax liability, or else 10% of the disputed tax liability, subject to maximum of 25 crores. So whatever is your disputed tax liability, 10% will be as a deposit. Okay, so the 25% penalty to be paid, 25% penalty is also a provision to be paid in cases of detention, seizure, and release of goods. So that's where 25% would come into picture. Otherwise, it is always the 10% of the liability. Once deposit amount is paid, balance liability is deemed to be stay. So there is no need to apply separately for the stay application of the balance liability. Also, appellate authority may pass and shall pass an order, but shall not refer the case back to adjudicating authority. Earlier era, there were too many remand backs referring case back to the adjudicating authority. Now, the first appellate does not have any power to refer the case to adjudicating authority. They have to take a call and decide the case on the merits. To summarize, Section 107 provides for first appeal against any GST adjudication order subject to pre-deposit and time limits. Number one, appeal is statutory right, but subject to strict compliance. Time limits and pre-deposits are mandatory. Appellate authority has full power to re-examine factual and legal issues, both, not only legal, factual and legal. So appellate authority will be the deciding authority on the case. Powers of revisional authority. So this is, first of all, who is the revisional authority? Commissioner or officer empowered. Only commissioner is the revisional authority, and he is the person who is empowered to pass any order under Section 108. This section empowers higher departmental authorities to suo motu or on reference revise any decision or order passed by subordinate officers if it is found to be erroneous. It is a kind of internal department correction mechanism, you can say. When such revision can be done. So basically, if you see, revision authority can examine any decision or order passed by subordinate adjudicating authority. Revision may be done suo motu, on reference, on information received, on observation from audit, inspection, investigation, any place. Now, what are the grounds? If the decision or order is prejudicial to the interest of revenue, if the order is erroneous, illegal, or passed without proper consideration, some material fact have been overridden, then the commissioner has the power to revise such order. The time limit for revision is, it can be done within 3 years from the date of original order, right? Now, when revision cannot be done, that is also important. So if that order is already decided in an appeal or it is pending in an appeal, then you cannot revise that because it is already being heard and the facts will be taken care of. Or else the last option is if the revision has already been made earlier. That means once an order is revised, then you cannot again go for a revisional order under this section. Difference in appeal and revision. Who files it? Taxpayer or department? Of course, revision is only the department. Who decides? Appellate authority. Over here, it is normally the commissioner. And when involved on grievance, over here, it is suo motu or through reference. Next stage, appeals to appellate tribunal. Appellate tribunal is yet going on to still to be functional, but yeah, the process is already laid out. So this is the second appellate stage under GST hierarchy. It provides for appeal against orders passed by the first appellate authority. Who can appeal? Both taxpayer and department definitely can file the appeal, whoever is a aggrieved person. Appeal lies against orders of appellate authority or revisional authority, both. Time frame. For the taxpayer, again, it is 3 months, and for department, it is 6 months from the communication of order. Opponent may file memorandum of cross objections within 45 days. This is very important to be taken care here. Once the matter is gone to a tribunal, that means memorandum of cross objection will be filed within 45 days. Has to be filed. Tribunal may allow further 3 months or 45 days, 3 months for filing of appeal or 45 days for the filing of cross objections if sufficient cause prevails. tribunal may refuse to admit such appeal because of its paucity and time things. It may refuse the appeals where matters are below 50,000. Again, to file an appeal in tribunal, pre-deposit is required before filing appeal to tribunal. Admitted tax liability, there is no option. You have to pay it entirety, or 10% of disputed tax liability in addition to 10% paid in section 107 in earlier appeal. So overall, when you file an appeal in appellate tribunal, that means 20% of the disputed tax liability has to be paid. 10% in the first appellate authority and another 10% over here before filing in the tribunal. Once the deposit amount is paid, balance is deemed to be stayed. There is no doubt in that. This cross objection I wanted to highlight here. That's why I was looking at this slide. When a taxpayer has enjoyed partial relief in appeal before the first appellate authority, but further appeal before second appellate authority has not been preferred but the revenue has preferred appeal before tribunal, the taxpayer is entitled to file a memorandum of cross objection, which is an appeal. MOCO is an appeal. MOCO is an appeal in respect of unfavorable points in the order of the first appellate authority that was left uncontested. This is where things change because of the cross objections, because the points which were uncontested can be brought down in, can be treated as appeal in if filed in the MOCO, memorandum of cross objections. It will be treated as the appeal filed by the taxpayer. Okay. Orders of appellate tribunal. Appellate tribunal shall, after giving the parties to the appeal an opportunity of being heard, pass orders thereon as it thinks fit, and of course confirming, modifying, or annulling the decision. It may even refer. Now over here the tribunal has the power to even refer the case back to the first appellate authority or revision authority or the adjudicating authority. If sufficient cause is shown, it may adjourn the hearing, but not more than 3 times. It is general in the entire GST, 3 times adjournment, not more than that. The orders of appellate tribunal may amend order to rectify the errors apparent on the face of the records. It has to be done in 3 months. Same rectification. Any order has to be rectified within 3 months of the date of order. If the liability is increased via such amendment, then opportunity of being heard. You have to give an opportunity to the aggrieved person. So opportunity has to be provided. If possible, every appeal should be decided within a period of 1 year of filing. In GST now, there is a timeline set for every legal or appellate authority also. So as far as possible, the appeal has to be decided within 1 year from the date of filing. Interest on refund of deposit paid. So if you are lucky and if you get the judgment or order in your favor, of course, the deposit, whatever you have paid, the 10% or 20%, it has to be refunded back. And the rate is mentioned in section 56, which says currently, if I am not wrong, it is 9%. (116) Authorized representative. So, of course, CA advocates are there, but many people are not aware. Even your regular employee can be authorized representative. Even your relative can be authorized representative. GST practitioner and retired officer not below the rank of Group B gazetted officer. The last 4 categories I have highlighted in red color. So, these last 4 categories cannot be. This is a disqualification. If dismissed or removed from the government service, convicted of an offense, guilty of misconduct, and insolvent. When you say insolvent, during the term of insolvency is not allowed. Once the insolvency is not there, he can represent you. Next, after tribunal, you go to High Court, right? Appeal lies to High Court against such GST tribunal orders. High Court examines questions of law. They will not entertain questions of fact. That is a legal clarity. A substantial question of law generally means interpretation of statute, conflict in earlier decisions, complex legal issues needing clarification. So the condition is case must involve a substantial question of law. Appeal can be filed within 180 days from the communication of order. Extension is possible if sufficient cause prevails. On satisfaction of the existence of question of law, High Court shall formulate the question, and appeal shall be heard only on such question. Only on such question. Respondents can argue that the case does not involve such question during the hearing. High Court has the power to hear any other substantial question of law also. The formulation of question does not bar the High Court to take another question. Case shall be heard by bench of not less than 2 judges. Next level appellate, appeal to Supreme Court. So an appeal shall lie to Supreme Court from any order passed by the principal bench of appellate tribunal or from any judgment or order passed by the High Court in an appeal made under the earlier section 117 on its own motion or an application by the party immediately after passing the judgment or order. All right, so Supreme Court, we don't have anyone over and above the Supreme Court, right? So that's where the appellate functionary rests. And now comes non-appealable decisions or orders. Non-appealable orders, it specifies which types of orders cannot be challenged. Simple words, certain orders are final, they cannot be appealed before appellate authorities. No appeal shall lie against the following types of decisions or orders. Order of transfer of proceedings to another officer, an order pertaining to seizure or retention of books, accounts, documents, etc. When books, records, or documents are seized under inspection, search provisions, any order related to such seizure or retention cannot be appealed. Once prosecution is sanctioned under section 132, that sanction itself cannot be appealed before appellate authorities. Section 80 allows relaxation in payment of tax dues in installments. If the commissioner allows or disallows installments, no appeal is allowed against that decision. So commissioner's decision regarding the installment is always final decision. Of course, writ jurisdiction to High Court remains available, and criminal proceedings are not covered under this. They are always separate criminal court process. Penalty for certain offences. This section is to prescribe monetary penalties for various contraventions for both registered or unregistered person. Any person committing these offences like sales without invoice or incorrect invoice, invoice without sales, that is also people are doing, tax collected but not paid within 3 months from the due date. We have already seen that this is covered under earlier sections also. Failure or short deduction or collection of TDS and TCS. ITC without purchase. These are the offenses where penalty is mentioned over here. Fraudulently obtains refund. Falsifies fake documents or no. Fails to register even though liable. You were supposed to register, but you are not registering yourself. Furnishes false info during registration or subsequently. That is why all bogus registrations have been eradicated now from GST. Transports goods without cover of documents. Lower turnover to evade taxes. Fails to maintain books or documents as prescribed. Fails to furnish info as inquired by the officer. sells, transports, or stores goods which are liable for confiscation. When you know these goods are not are liable to be confiscated for X reason, you cannot tamper with them. Issuing invoice or documents using registration number of other dealer, tampers with evidence, and disposes of or hampers goods which are detained or seized or attached by the officer. The penalty for all these offenses is 10,000 or the tax amount, whichever is higher. Minimum amount is 10,000. Certain other penalties in the same section. So, any person who aids or abates all this possession, removing or disposing goods, receives or involved in supply. So even though he is not receiving the goods, if he is involved in supply of services also, fails to appear before officer when issued with summons, the penalty is around 25,000. And last penalty is regarding the e-commerce operator. Suppose he allows any URD seller to supply through his portal, then penalty is attracted. Allows interstate sales by person who is not eligible and fails to furnish correct details in statement of sales by exempted URD dealers. Penalty is 10,000 or tax, whichever is higher. In short, Section 122 imposes monetary penalties for wide ranges of GST offenses involving tax evasion, fake invoicing, wrong ITC claims, failure to pay collected tax, and procedural violations. Section 122 is administrative but very, very wide. Tax authorities must consider the intent. They have to use this section very cautiously. Must consider the intent, severity, revenue impact before imposing penalty. Courts favor proportional application of penalties, and similar approach has to be taken by the officer also. General penalty. So of course, it is quite possible that there might be some transaction, some act or some omission which is not covered in the act, right? Section 125 provides for penalty in cases where no specific penalty is provided elsewhere under the act. It applies when any person contravenes any provision of the act, rules, or orders, but for which no specific penalty has been provided elsewhere. The penalty may extend to 25,000. This penalty is applicable per contravention. Now, this is important to understand. The penalty of 25,000 is per contravention, right? Who can be penalized? It can be any person, registered or unregistered. Includes taxable persons, transporters, e-commerce operators, unregistered suppliers. For example, failed examples which are covered in general penalties: failure to display GST registration certificate at the business premises. There is no specific penalty written in the law, so it will be covered under Section 125. Similarly, not updating address change on the portal. Small petty matters which are not having specific penalty in the law. Of course, Section 125 takes care of such omissions. In simple words, if you break any GST law and there is no specific penalty for that violation, Section 125 applies. General disciplines related to penalty. Section 126 lays down principles and safeguards that the tax authorities must follow while imposing penalties under GST. It is aimed at preventing arbitrary or harsh or disproportionate penalties for minor mistakes. For example, no penalty for minor breaches or procedural mistake. No penalty for errors easily rectifiable and made without fraudulent intent. That is important. Errors can be, but without fraudulent intent. For example, clerical mistake in invoice series, or consideration of circumstances before imposing the penalty. The officer has to understand the circumstances, whether any intentional fraud has taken place or intentional mistake or error has taken place. Or they can also think over the frequency, whether it is first time versus repeated mistake, system errors or staff ignorance, innocence versus willful default, sort of. And very important is impact on tax revenue. That also has to be considered in by the officer. Mandatory hearing before imposing penalty. I think it is general in all the laws. The proper officer must give the person an opportunity of being heard before imposing any penalty, so that there is no over high-handedness. No double penalty for the same act. Very important. If a person is already penalized under a specific provision, no additional imposed for the same act under a general penalty section. Penalty should be proportionate to the degree and seriousness of the offense. Detention, seizure, and release of goods and conveyances in transit. Yeah, too many cases are going on. So what is this? Now we will, section 129 deals with the detention, seizure, and release of goods and conveyance. Conveyance is the vehicle in which the goods are being transported. This section comes into play when goods are being transported without proper documentation, or there is contravention of GST provisions. Again repeating, this section comes into picture when goods are being transported in transit, right? So this section empowers the proper officer to detain goods and the vehicle both if goods are being transported or stored in contravention of any GST law. The primary objective here is to ensure tax compliance during the movement of goods. So what are the conditions for detention? Detention may occur due to no valid tax invoice or e-way bill, discrepancies in documents, or mismatch in declared and physical goods, suspected evasion of tax. Any of these can be the conditions for detention. And how the goods are released, what is the process or what is the penalty to be paid for releasing the goods and conveyance both. So first option is if the owner himself comes forward. Okay, there are two ways, as we say, voluntary, right? So the owner comes forward and he pays tax and penalty equal to 200% of the tax payable, right? So technically he is paying 300% tax, original 100% tax plus penalty 200% tax. Then he can, goods and conveyance can be released. Second option is where tax and penalty. Now tax though of course he has to pay plus penalty equal to higher of 50% of the value of goods, not the tax, 50% of the value of goods or 200% of tax, whichever is higher in this. This second option is applicable only when owner does not comes forward. Repeating the second option again, tax and penalty equal to higher of 50% of value of goods or 200% of tax. That is huge amount. So it is better that the dealers take care about their goods in transit. Time limit for proceedings. Yeah, the proceedings, because goods are in transit, then there is always exigency of business. So the proceedings must be completed within 7 days from the issuance of detention order. If not, goods must be released. Also, adjudication should be completed within 7 days of issuing notice. Notice will be issued and 7 days for passing the order also. Now, if penalty is not paid within 15 days of the order, then goods or conveyance shall be liable to be sold or disposed of. The officer has the rights to dispose of or sell the goods involved in the transit. Note that if goods are hazardous or perishable, officer may not wait for 15 days also. He can reduce this 15 days. And very important, of course, holidays and non-working days are excluded from such 15-day limitation. Plus, if the transporter pays a penalty of 1 lakh, whichever, also if the transporter pays the penalty or 1 lakh rupees, whichever is less, I'm saying the transporter, not the owner of goods, then conveyance may be released because the goods are still lying with the officer. Section 129 acts as a strong deterrent against tax evasion in transit, but also demands strict procedural compliance from businesses. The penalties are significant and businesses has to ensure proper documentation and adherence to e-waybill norms to avoid any detention. This is very, very important because apart from the reputation being at stake, even financial implications are higher over here. All right, this I have already covered. Conveyance, yeah. Next, 130. Confiscation of goods or conveyances and levy of penalty. This is again a punitive action for serious GST offences. Now over here, there is malintention. The first line, if you see, supplies or receives any goods in contravention with intent to evade tax, right? In 129, there was no such intent of evasion of tax. There was some clerical mistakes or sort of, but over here it is more with the intent. So over here, this is used when goods or conveyance are involved in offenses like tax evasion, supply of goods without invoices, for example, fraudulent documentation. It is very clear that it is different from 129. Confiscation means permanent seizure with ownership transfer to government. Once the goods are or conveyance is confiscated, the ownership lies with the government. It can be supplies goods without registration, contravenes GST provisions, uses any conveyance in contravention of GST provisions. Once goods are confiscated, of course, title will be lying with the government. When we say title will be lying with the government, that means government can dispose of that in 3 months also. Penalty for owner of goods shall not be less than 100% of tax. So equivalent of tax, definitely that will be the penalty, and penalty for owner of conveyance shall be equal to 100% of the tax. What is the difference between the two? Penalty for owner of goods shall not be less than 100% of tax. That means we are saying minimum penalty is 100% of tax for the owner of goods. But when it comes to the penalty for owner of conveyance shall be equal to 100% of tax. So that is the maximum capping for the owner of conveyance. Section 132. Okay. So what is the purpose of this section? To punish serious tax offenders with prosecution, that is imprisonment and fine. It covers offenses where there is fraudulent intent or willful evasion of tax. This section is invoked when a person commits any of the following offenses knowingly and with intent to evade tax. Remember, knowingly and with intent to evade tax. So same supplies goods or service without issue of invoice, issues fake or bogus invoices without actual supply, or avails ITC fraudulently using fake invoices, collects tax but fails to pay, fraudulently obtains refund, falsifying the records, attempts or abates any of the above, receives services in contravention. Now, what is the punishment? Right? So, he would be liable to where tax is more than 5 crores. Right? You can see it in the blue color window in the screen. Where tax is more than 5 crores, he would be liable for imprisonment for 5 years plus fine, because there is serious offense and having a huge impact. Where it is between 2 to 5 crores, so more than 2 crores but less than 5 crores, it is 3 years plus fine. And where it is between 1 to 2 crores, it is 1 year plus fine. Very important, if he is convicted for second time or again, he shall be liable for imprisonment of 5 years plus fine, irrespective of the impact or quantum of the tax evasion. Note that previous sanction of commissioner is mandatory in section 132. There can be no order without previous sanction of commissioner under this section. So what are the takeaways in this? Prosecution under section 130 is criminal, not merely administrative. guilty intent is essential, what we call as mens rea, right? So that is very, very important. Existence of mens rea for this invocation of this section. Arrest and prosecution can happen even before tax demand finalization. Serious GST frauds fall under section 139. This I have covered, that imprisonment for 5 years plus fine if he is convicted again. All right. Carious liability process. Okay. So this is to fix personal criminal liability for artificial entities, for companies, for LLPs, firms, trusts, societies, right? So to fix personal criminal liability on directors, managers, karta, trustees, etc., when a GST offense is committed by the artificial entity, to ensure real persons behind the company are held responsible, not just the entity. If an offense is committed by a company or similar entity, the company and every person who at the time of the offense was in charge of and responsible of the company for conduct of the business, they both are deemed to be guilty of the offense. Defense available to such individual persons, of course, not necessarily that that person was aware of the fraud going on or any irregularity going on in the company or artificial entity. So defense available to him is such persons can avoid liability if they prove the offense was committed without their knowledge or they exercise due diligence to prevent the offense. This can be a defense available to such individuals. Rest liability of directors, officers, etc., even if they were not directly in charge, if offense is committed with their knowledge, their consent, they are in connivance to this offense due to their neglect, then they are deemed as guilty. The provision ensures that even persons behind the scenes can be held liable. So simply this section ensures that GST violations committed by the companies or firms or other artificial entities do not escape criminal liability. Their key management persons are held accountable unless they prove innocence. Last and very important, 138, which is compounding of offenses, right? So to allow compromise settlement for certain GST offenses, prevents prolonged litigation and court proceedings, allows offender to avoid prosecution by paying compounding fee or compounding amount. In simple words, pay certain fee or amount, settle your criminal offense and avoid jail. Now, who can apply? Any person registered, unregistered, who has committed an offense under GST law punishable under section 132 can apply either before or after initiation of the prosecution. Who has the power to allow compounding? Commissioner or any person authorized by him. Offenses which cannot be compounded, that is, offenses which are not eligible to be compounded. This is very important. Repeated offenders for same offense are ineligible. They cannot go for compounding second time. Persons who have committed offenses involving serious offenses like fake ITC, fraudulent refunds, they cannot. Now, the compounding amount, right? Compounding amount is minimum 25% of tax, maximum 100% of tax. There is no fixed amount. It will range between these two amounts, 25% and 100% of the tax. Compounding under section, what are the effects? I think we have covered this, right? Non-compoundable offenses, yes. Of course, very important, it does not affect the civil tax liability. It does not mean that once you pay the compounding fee, you don't have to pay the tax, interest and penalty as levied under any other section. Civil tax liability, you have to do it. This is only for the criminal. So 132 prosecutions are covered in this. They are settled under 138 compounding of offenses. But you will have to pay tax, interest, penalty, whatever is applicable under any other sections. That's it. thank you. I hope I have been able to deliver the legal vision of the GST department, which is both transparent, clear, and which gives option and a chance for the taxpayer also to represent himself in the best way. Thank you. Thank you, and I am open to questions in case any questions are available.
Thank you so much, sir. It was truly a very insightful session which you took for us. We are so thankful to you, and it was a very knowledgeable and knowledge-packed session. We learned a lot about GST. I can speak from my
Thank you.
own personal experience. So, being a second-year law student, knowing nothing about GST, almost I've gained a lot of experience, and I feel I've gained a lot of experience in understanding GST and indirect taxes. So, thank you so much. It was a session wherein we were able to understand wherein we were able to understand such complex things in a very simple language through PPTs, of course, and also the PPTs only containing small information. The way you explained it was truly something we have benefited a lot from. So thank you so much for that, sir. However, sir, for questions, we have got two questions in the chat section. One is from T Chopra. Certain persons are charging CGST and SGST above the maximum retail price. Is it valid, sir? Any answer on this?
People charging local tax above the MRP.
Yeah, yes, sir. Is it valid?
No. But see, if talking from the GST angle, since you are collecting, since the dealer is collecting, he has to pay. But from the purchaser's angle, they will have to go for the civil process.
All right, sir. Thank you so much. I believe that completely answers the question. We have a second question, which is also the last question. If the supplier has not discharged the output tax liability, can the purchaser still claim ITC upon payment of input tax when the said transaction is evidenced by legitimate invoices or otherwise?
Okay, so it's not covered in the session over here today, but then see, once the law is very clear as on date, if it is reflected online, then only you can claim the input credit of your purchases, not on the basis of the documents available with you. The other person, the seller, has to upload it on the portal. And of course, there are certain other laws also, sections also, which will come into picture, whether it is eligible or ineligible, that also has to be checked, and then only you can claim. Considering the legitimacy or eligibility of the input credit, if it is reflected online, if the seller has paid it and uploaded it on the portal, then only it will be available.
Sure. Thank you so much, sir. I believe that also answers this question. Sir, there's another one question which we got. It's from CCO Nagpur, which is in regards with the section 161 of the rectification order. They're asking that
161.
yes, sir. What all can be classified errors which are apparent on the face of the record? Like if you could give any examples for this, I think that would benefit this question.
So apparent on the face of records is, if I want to give an example, it would be, say, for example, in the notice or in the hearing or even in the order, suppose they have a briefing where, because it is a speaking order, if the liability was determined at say 1 lakh rupees, for example, but when
Yes.
finalizing at the end, when the concluding para came, if it was written 10 lakhs, 10 was added inadvertently. Now this is very clear that it was 1 lakh, but by it was simple typing mistake. So this can be rectified.
All right, sir. So we have just one last question which has just popped up, and we'll take this as the last one due to paucity of time. It reads that there has been a recent Supreme Court judgment. They have not stated the name of the judgment, but it states that the state governments can charge tax over and above the GST charge for entertainment tax on digital services. Doesn't this render the need of GST void? Kindly share your thoughts. So
Can you repeat the question? Sorry, because it is too much. Yeah.
Sure, sir. I'll read it out. There has been a recent Supreme Court judgment which states that the state governments can charge tax over and above the GST charge for entertainment tax on digital services. Doesn't this render the need of GST void? Kindly share your thoughts. It's for the participants.
See, I think it is more on the rather than the interpretation of law, it is the making of law, right? If Supreme Court is saying we'll have to see the facts and circumstances of the case first. What are the facts and circumstances of that case? Then only we can generalize it anywhere.
Yes, they have mentioned the name of the judgment also, State of Kerala versus Asianet Communications. However, I think we'll have to dive into the
Yes,
fact. So,
right.
uh, I think this question cannot, due to paucity of time, we cannot take this question. So,
Sure.
thank you so much for asking. I'd like to pass it on to, so for the vote of thanks, I'd like to pass it on to Garima ma'am, Dr. Garima Pal. She is the assistant professor at MNLE Mumbai. She's also the faculty in charge of the internship and placement cell of MNLE Mumbai, and she's an active researcher in a lot of fields. So over to you, Garima ma'am.
Thank you, Athar. Respected dignitaries, Shri Sumit Kumar, Principal Additional Director General, Directorate of Taxpayer Services, Mumbai Zonal Unit, Shri Joseph G. Patel, Joint Director GGTS, MZU, Mr. Amit Kumar, Assistant Registrar Academic, representatives from the Directorate General of Taxpayer Services, faculty members, organizers, participants, and dear colleagues. On behalf of Maharashtra National Law University, Mumbai, organized by the Center for Mediation and Research and Internship and Placement Cell of MNLU Mumbai, in collaboration with Directorate General of Taxpayer Services, Mumbai, I extend my heartfelt gratitude to everyone who made this webinar a sounding success. First and foremost, I express a deep appreciation to our guest speaker, Mr. Ritesh, for gracing the occasion and sharing invaluable insights. Thank you for your comprehensive and enlightening presentation on the intricacies of GST dispute resolution mechanism. Your expertise and clarity has enriched our understanding and inspired meaningful discussions. A special thanks to the Directorate General of Taxpayer Services, officers of DGTS, Mrs. Reena H. Gangwani, and Mr. Praveen Shekhar, AADs, DGTS, MZU, for their gracious collaboration and unwavering support. Your commitment to taxpayer education and outreach has made this initiative impactful and relevant. I extend my sincere gratitude to our Vice Chancellor, Honorable Professor Dilip Uke, and Registrar Dr. Pratap Singh Salunke for your constant encouragement and guidance, which has been instrumental in shaping this event. My thanks also goes to the faculty in charge, Dr. Upanmanyu Sen Gupta and Mr. Abhijit More, organizing committee and student coordinators of MNLU Mumbai, Vedant and Atharv for their tireless efforts in ensuring the seamless execution of this webinar. To all our participants, academicians, professionals, students, and stakeholders, thank you for your active engagement and thought provoking questions. Your enthusiasm made this session vibrant and interactive. Lastly, I acknowledge the technical team for their flawless support in managing the virtual platform, ensuring a smooth experience for all. We hope this webinar has provided valuable insights into GST and fostered a platform for knowledge exchange. We look forward to more such collaborative endeavors in the future. Thank you all once again for your time, support, and contributions. Have a wonderful evening.
Thank you.
Thank you so much, ma'am. So with the permission of Sumit sir, I would like to end the program. Thank you so much. Thank you so much, everyone, for joining the program.
Thank you so much.
Thank you.
Thank you, Morali. Thank you very much.
Thank you, sir.
And thanks to our principal AD, sir, Sumit Kumar, sir. Thank you so much, sir, for all the support.
Thank you, Ritesh sir. Thank you for accepting
you.
our invitation.